The same analyst who called Bitcoin's crash to 70,000 is now warning it could drop to 40,000. And he's giving us an exact timeline. Right now, Bitcoin is hovering around $83,000. Most people think the worst is over. They're buying the dip. They're feeling confident. But one analyst has a completely different view. And here's why you need to pay attention. This isn't some random Twitter account. This is the person who predicted the exact drop we just saw. So let's break down what's actually happening. Bitcoin hit an all-time high of over $108,000 just a few months ago. Since then, it's been bleeding. We've seen massive liquidations. Retail investors are panicking. Even the smart money is getting cautious. The analyst says we're not done falling yet. According to their technical analysis, Bitcoin could drop another 40% from current levels. That means a price target of $40,000. Now I know what you're thinking. 40,000 sounds insane. It sounds like fear-mongering. But let's look at the pattern. Every Bitcoin bull run follows the same cycle. We get euphoria at the top, then denial as it starts dropping, then panic, then capitulation. We're currently in the panic phase, but we haven't hit capitulation yet. That's the moment when even the diamond hands start selling. When your uncle who bought Bitcoin at 60,000 finally gives up and takes the loss. That's when we find the bottom. The timeline matters here. The analyst predicts this drop could happen within the next 60 to 90 days. That takes us in a late spring or early summer. Historically, that's when Bitcoin has found major bottoms before starting new rallies. Here's what makes this different from other predictions. This analyst is using something called Elliott wave theory combined with on-chain metrics. They're not just drawing random lines on charts. They're looking at actual blockchain data, wallet movements, exchange inflows, miner behavior, and the data tells a scary story. Long-term holders are starting to distribute. That means people who bought years ago and held through everything are finally selling. When the smart money exits, that's usually a sign we have further to fall. But here's where it gets interesting for the bigger picture. While Bitcoin might drop to 40,000, we're also seeing something massive happening in the traditional finance world. ISO 20022. ISO 20022 is the new global banking standard. It's designed to make cross-border payments instant and cheap. And several cryptocurrencies are built specifically to work with this system. We're talking about XRP, XDC, Stellar, Algorand, Hedera, and IOTA. Why does this matter during a Bitcoin crash? Because institutional money doesn't just disappear. It rotates. When Bitcoin drops, smart institutions look for assets with real utility. Assets that solve actual problems in the financial system. The ISO 20022 tokens are designed to bridge the old banking world with the new crypto world. They're not just speculative assets. They're infrastructure. And infrastructure survives bear markets better than hype coins. So while Bitcoin might be heading to 40,000, the ISO tokens could actually benefit. We've already seen XRP hold up better than most altcoins during this crash. That's not an accident. Institutional players are positioning for the future. Here's what you need to watch over the next 90 days. First, Bitcoin support levels. If we break below 75,000, the next stop is 60,000. After that, it's a straight shot to 40. Second, watch Bitcoin dominance. That's the percentage of total crypto market cap that Bitcoin represents. If dominance keeps rising, it means money is flowing out of altcoins into Bitcoin as a safe haven. If dominance starts falling, it means altcoin season might be starting. Third, keep an eye on the ISO 20022 tokens. If they start pumping while Bitcoin dumps, that's your signal that institutional rotation is happening. That's when you want to be paying very close attention. Fourth, watch the fear and greed index. Right now, we're in fear territory, but we need extreme fear. We need capitulation. That's when the real bottom forms. Look, nobody knows the future. This analyst could be completely wrong. Bitcoin could bounce from here and never see 60,000 again. But the risk-reward says we should be cautious. If Bitcoin does drop to 40,000, that's not the end. That's actually the opportunity. That's when you stack sats aggressively. That's when you dollar cost average into quality projects. That's when generational wealth is built. This is educational content only, not financial advice. Always do your own research before investing. The crypto market is extremely volatile and you can lose everything. Follow Stack Daily 60 for daily crypto and money tips.